Good afternoon. Today is Friday, the last trading day for the first week of February, and the time right now Singapore is 12:07 in the afternoon. Overnight on Wall Street, we did see a little bit of firework, but mostly they are centered on commodities. As far as Dow Jones is concerned, we can see that there was very tepid performance overnight by the Dow Jones. There was no significant trading activity other than the fact that it did close on a slightly negative note relative to the other major equity index such as the S&P 500 and the Nasdaq 100. So over the Dow Jones, you can see the high traded this week was 34,334.7, and it has yet to take out the January high of 34,342.3. So you can see that based on last night's performance and based on the idea that only recently on Wednesday we had the Federal Reserve Chairman, or rather the Fed raised the interest rate by another quarter point, and followed by a commentary by the Fed chairman saying that disinflation is currently appearing, meaning to say prices are beginning to come down, and this is now the catchphrase, disinflation. I think this is a misnomer. Market took it as a sign to ramp prices, equity prices are higher, but I think that's going to be a mistake, a big mistake, because I think most analysts has missed the big picture here, and we are really beginning to see the sign of inflation re-emerging in a few sectors, in particularly wages. So tonight, non-farm payroll is going to be critical. Well, we want to see if the job numbers reflects the idea that despite many rounds of rate hikes, employment remains very resilient. Companies are still employing, and the main thing is our wages continue to climb, because once wages start to climb, this will contribute to inflation, and this part of the inflation is very, very stubborn and difficult to bring down once it starts to rise. Okay, so there we have it. The Dow Jones did not extend higher, and yesterday, of course, we have the Bank of England as well as the European Central Bank also simultaneously hike rates by 50 basis points, and but the language they use thereafter is very similar to what the Fed chairman is saying. So they are parroting the Fed chairman's idea that this inflation is beginning to surface, and that is good, meaning to say that they are beginning to see some sign of results of their very aggressive rate hikes, and they take it as a sign that they are on the way to defeat inflation. This cannot be further from the truth. We know that in Europe, prices remains very, very high, especially in UK, and soon, I believe very, very soon, I think the reality is going to hit equity players, in the sense that this rally here is most likely a fool's rally. Okay, over in the S&P 500, we can see the prices continue to surge higher, and prices has gone up to just under 4,200 to 4,195.4, not very far away from my target here of 4,264, okay, 0.5. So I can see that this is again the three-wave rebound, and there is a target here that at most this market can maybe extend to 4,370 to 4,530. So again, this is going to be the objective, but whether the market can get there, that's another story, because in the 4 hours time frame as of last night's closing, we saw this. This is what we call a doji, and the fact that this is a doji is telling us the market right now at this current point in time where it settles is really unsure which way to move. Would it be higher? Would it be lower? Of course, both ways is still possible. So I suppose we have to look for clues as to whether it is sustainable. So the closing price tonight, because it's also representing the end of the week itself, is going to be crucial in next week kind of trading activity. So do watch out for tonight's closing and look out for signs that the market may be beginning to lose the momentum upside. Okay, so the risk now is increasingly shifting to the downside. Over the Nasdaq, we also saw another ramp up to prices to 12,880.1, and again, this is very, very close to my counter trend target of 2,885.5. Very, very close. And again, similar to the S&P 500 on a 4-hour time frame, we see this doji here, again reflecting the same sentiment as what we saw in the S&P 500, meaning the market players at this current point in time is not sure whether they want to push it higher or to take some profit off the table. And again, the closing price tonight is going to be very, very telling. Okay, so do watch out for how market closes this weekend. Okay, And on Asia itself, we can see prices are beginning to retreat. The Hong Kong market did not enjoy the dividend from the last few rounds of, or at least the last 48 hours of rally. In fact, it has been backpedaling. The market reached a high of 22,700 right after the Chinese New Year holiday, and since then the market has been pulling back. 21,459 is the low for today so far. And at this current point, you can see this market is now sitting on this near-term support line, which has been in place since October of last year. And over the last 3 to 4 months, we see that this market has never closed below this support line. So if we ever get a bar that close below the support line here, that will be giving us a sign that perhaps the market may have already peaked at 22,700. So do watch out for that possibility here. Over in the Shanghai Composite Index, market continues to fall. The high traded is 3,110, very similar to what we saw in the the Hong Kong Hang Seng Index. This market is pulling back very aggressively, and near term the support is likely going to be somewhere near 3,002 to 3,220, okay, 225 thereabout. If these prices here cannot hold the market from sliding further, then that could also bring out the possibility that this market may have reached a temporary top. Moreover, the price has not been able to get back into this support and resistance line. Market came so close but did not quite make it, and now the market is coming back down. So that gave us an idea as to whether the market is has the momentum to go even higher. Now, unlike the Hong Kong and Chinese market, the Nikkei 225 actually managed to do a new high. 27,612 is a high so far this morning. But over the last 48 hours, you see that despite Wall Street charging new high for the month itself, and relative to what we saw in January, just last month, the Nikkei 225 has been very cautious in chasing after the new high. So it's only this morning the market actually popped up to 27,612 and is beginning to lose momentum. So we have to see whether this can extend later in the second half of the day. And of course, the key here will be how Wall Street closes tonight. Okay. In foreign exchange market, we did see a bit of a volatility. Essentially, the dollar index has managed to recover very aggressively. That led to a lot of unraveling in commodity prices, including crude oil and gold in particular. But we can't see that very clearly in the dollar versus the yen, because after 3 major central banks has hiked rates this week, the Bank of Japan is under tremendous pressure to also do something similar, and market participant is betting that the Bank of Japan will have no choice but throw in a towel and to eventually allow interest rates to rise. So that explains why the yen is so strong relative to the dollar. So the dollar strength is not evident in the dollar versus the yen trade. There's every possibility the 127.21 that we saw in mid of January, it likely will be taken out as the market drifts lower. Okay. Over in the euro versus the dollar. Now, this one is more obvious. Now, going into the FOMC, the prices was hovering around here somewhere in the mid 109, and right after the FOMC, the market ran out to 110.32, and I have always mentioned 110 is going to be a mountain too high to cross, but it did cross that mountain, but it didn't manage to stay there for long, and prices start to unravel last night during the whole day. Then the entire day, it started off with a trickle and then started to slam down during the New York trading hours. So of course, that is incidental, because right after the Bank of England, especially the European Central Bank, hike interest rates, the euro dollar starts to unravel, because the message they are giving to the market is that we are going to follow in the footsteps of the Federal Reserve, maybe take a pause or slow down the interest rates. So the risk of very aggressive rate hikes going forward is currently as telegraphed by the central bankers, saying that they're going to go easy now. So that gives the reason for, or rather that remove the reason for buying all these currencies now. So that's the reason why we can see that yesterday this euro actually started to see massive profit taking. So if this trend continues and if the market drifts lower and lower to touch the base of this rising price channel, and if it closes below, that again gives us an idea that perhaps 110.33 was the peak for this round. Okay, so there's that danger over here. Over in the Aussie, it of course also have a bit of influence from the other currency when they started to unravel. It also took down the value of the Aussie versus the dollar, but more importantly, because I think they are very adversely affected by the fall, the sudden or abrupt fall in the price of gold. So that see that the Aussie right now is just at 0.7060 levels. Okay, so it also came down about 100 pips from the high that we saw the day prior. Okay, over in the over the sterling, we also saw similar move in tandem with the rate hike by the Bank of England. You can see the prices in the sterling also started to fall right after that rate hike happens. Okay, so this is tantamount to telling us that the Bank of England is telling us the risk to the upside right now is removed, and everybody started to take profit, okay, from the long sterling position. So that led to very persistent whole night, the entire night. You can see that the prices were under selling pressure. Over in the dollar versus Canadian, yes, prices took out 133, went up to as low as 132.62 before it starts to climb. And this climb is very persistent in New York trading. So this lay the foundation for the idea that perhaps there is going to be a temporary bottom for dollar versus Canadian, and we want to see prices going higher. Over in crude oil, because of the dollar strength, you can see that crude oil prices have been back pedaling to as low as $74.97 last night. And of course, this is not only the only reason. Of course, we have also known on Wednesday that the inventory level in the States for refined energy products is very, very high, much higher than the market anticipated. So that led to the idea that it's going to be a oversupply in the marketplace. Of course, that depresses prices. Another factor that we have to consider for those trading energy products is that come Sunday, the EU is going to impose a price cap for refined products, refined energy products coming out from Russia. So that again gives this market a generally negative mood. So prices started to slide. There's a real possibility it will go back and test the $70 at the way it's like. Okay, so over in natural gas continue to decay, and this is the lowest I think in the past 9 months. Okay, the lowest traded was $2.43, $2.43, and it does not seem to have telling us that the bottom is in place. We need a very violent rebound to give us some idea that it's going to be the bottom. Okay, so far I tried this week, it didn't work out. I tried to buy, I was stopped out. So hopefully at lower levels we can get better prices. Now the one that really caused a lot of heartache yesterday was this mean. Gold prices went up to $1,959.74 on the back of the Federal Reserve rate hike, and but it didn't stay there long enough. And right after the dollar started to creep out, especially the dollar index, there was a massive selling of gold positions, taking the price back to $1,915, not very far from this low here that we saw on Tuesday at $1,900. So anyway, remember yesterday I was mentioning that going into next week, I have this idea that perhaps gold prices, from now until next week, there's a good chance gold prices may actually attempt $2,000 per ounce. But obviously, after last night's massive fall, this possibility becomes further and further away. Although we cannot rule it up 100%, but it does not look good. Okay, because this unraveling of gold prices is a little bit unusual because it's very fast and very aggressive. Can you imagine prices drop more than $40 in just a few hours, and this is on balance a very aggressive move. So I also mentioned yesterday that going into next week, I do believe prices of gold may actually started to peak. But of course, the ideal scenario is that they first go to $2,000 and start to come back down. But now it looks like 1,960 is all it can do. And if this is the case, there is going to be any kind of sensible rebounds. Recovering 50% will be a good level. I'm trying to see at this level 1,935 if I'm going to get any kind of selling signal. If I do, I'm more than happy to sell because I was prepared to sell next week onwards, because the next pullback is going to be quite significant and more durable, because I do expect any kind of correction to last more than a month. And if I can get into a short position especially after last night's major plunge, that may set the stage for a reversal in gold prices going forward. Okay, that means the dollar is coming back up strong if gold prices is going to come under severe pressure. Okay, so take that in perspective. Over in the silver market, we saw a similar fall in sympathy. The market went up to $24.64 and then practically crashed. Okay, so again, if the market can actually recover 50% to $24, I think around this level, the idea is to look for a reversal signal and see if we can position shorts and put the stop above $24.64 and take our chances from there. Because again, the Q will come from the gold market. If the idea that gold market may go into a more significant pullback, then of course silver prices may also go down in sympathy. So I do watch out for this potential move in precious metals here. And over in digital assets, we did not see any follow-through buying on Bitcoin yesterday. High so far is still 24,246, and this was actually traded yesterday, and prices remains very much in play. The market did not show any sign of a major sell-off like what we saw in gold market or silver market, but basically it's just holding water. So the important thing to look out for will be the support line that we have drawn here, and if the market do break below and close below, then that could be very telling. Over in Ethereum, we do have a marginal high, and this morning we can see the market went up to $1,713.84, and then incidentally, the moment it hit a new high here, the market end up with a doji, and this doji is a long-legged doji, and it is bearish. Okay, at least on the short term, because right after the appearance of this long-legged shadow doji, we have this a rather relatively big drop, okay, based on this time frame, which is 4 hours time frame. Then that gives the idea that short term there's going to be pressure to the downside. So do not buy right now. Let's see whether the correction will go how deep. Ideally, it stops near the support line here, but if it does break below, do watch out. Okay, and over in Cardano, very similar to what we saw in Ethereum, there was a marginal high traded at 0.414, and similarly to the Ethereum, this is what I call a shooting star. Okay, shooting star is by definition a very bearish development, and right after the appearance of this shooting star, we have prices started to pull back. Okay, so this is again a sign that market may be running out of steam, and again the key here will be this support line. A close below this support line will be indicative that the prices may have had a short-term peak. Okay, so we have to watch this as we go along. Now, Solana did not have a marginal high either yesterday or today, and but it did try to challenge this support and resistance line, which has been in place all the way back since the beginning of this year. Okay, so this is a more than a month kind of significance. Prices challenge, failed to go beyond. This is the second challenge this week, failed to cross beyond, and then again see similar to what we saw in Solana. In Cardano we also have a shooting star. So this is again a bearish development. Near-term support for this is lying somewhere between $22.20 to $20.40. So this bracket of prices is more than likely to hold prices, but if it fail, then that means something else is at work. So that's all I have for you. Remember, tonight we have non-farm payroll going to be on at 9:30 p.m. Singapore time. Do watch out. Market do expect a climb down in the number of new jobs being created. The expectation is 185,000 new jobs created compared to the previous month of 200,000 new jobs. So there is a climb down from there. But more importantly, are we going to see wage increases and whether the unemployment rate see any dramatic rise? Okay, if that is the case, then of course this is all bad for equity markets. So there you have it. So for those who are keen to join me every Sunday at my regular webinar, remember it's 8 p.m. on Sunday, and do register to get access. In the meantime, have a great weekend ahead and be safe. Bye-bye.